All right, welcome to Talk Tickers. Today, we're digging into Duke Energy's latest earnings call. Let's get right to it. So here's the game plan. We're going to hit the headline numbers first, then figure out what's really driving them. After that, we'll look at what management's saying about the future, try to make sense of the market's kind of strange reaction, and then wrap it all up with our final verdict on what's next. All right, let's jump right in. The big story this quarter? Duke came in hotter than Wall Street was expecting. A really clean beat, actually. So the number everyone was watching, adjusted earnings per share came in at $1.81. And, that's a solid beat. We're talking about 7 cents higher than the consensus, which is almost 4% better than expected. Can't argue with that. It's a really clean result. And it wasn't just the bottom line either. The top line, the revenue, also squeaked past expectations. It landed at $8.54 billion, and that's up almost 5% from last year. So solid growth all around. So you're probably asking, okay, great numbers, but where did they come from? Well, it looks like the core business is just firing on all cylinders. It really came down to fundamental strength this quarter. You had new rates kicking in, those project-specific charges they call riders, and just good old-fashioned strong demand from customers. All that created a really nice tailwind that was more than enough to fight off the negatives, like higher interest costs and weather that wasn't quite as favorable as last year. Okay, let's shift gears and talk about the future, the guidance. This is where the story gets really, really interesting. And trust me, it's a big one. So the big headline here, a brand new 5-year capital plan. And the number is just massive. We're talking $95 to $105 billion. I mean, to put that in perspective for you, $100 billion is bigger than the entire market cap of a lot of companies in the S&P 500. So this isn't just a tweak to the budget. This is them planning to fundamentally transform the whole company. And all that spending, it's backing up a super confident outlook from management. First, they tightened up this year's guidance. That's always a good sign, shows they know where they're heading. They also stuck by their long-term growth target of 5 to 7%. But here's the kicker. They are now saying that by 2028, they expect to be at the top end of that range. That's a huge signal of an acceleration coming down the pike. So where's all this cash going? Well, it's a direct response to this incredible surge in electricity demand that we're seeing. We're talking about a boom from new data centers and all the manufacturing that's moving back to the southeast. This isn't some pie-in-the-sky guess. They're building this stuff because the customers are already lining up. And if you want to know how confident management is, just listen to this quote from the CEO. He literally said the fundamentals of the business are the strongest they've ever been. I mean, wow, you just don't hear that kind of bold statement from a utility CEO every day. Okay, so you've got a clean beat, a massive growth plan, a super confident CEO, so the stock must have soared, right? Well, not exactly. The market's reaction was, well, let's just say it was surprisingly quiet. The stock was basically flat on the day. And this isn't a one-off thing. It's been pretty sleepy for the last month. And for the whole year, we're only looking at a low single-digit return. Not exactly what you'd expect. So this brings us to the million-dollar question, right? Why the big disconnect? The company's doing great, but the stock is just treading water. What gives? The answer, it seems, is a classic Wall Street tug-of-war. On one side of the rope, you have this incredible long-term growth story. I mean, it's fueled by real demand from data centers. But on the other side, you've got investors worried about the near-term stuff, the big questions. How are you going to pay for all this? Are the regulators going to approve everything? And can you actually pull off all these huge projects without any major screw-ups? Those are the risks the market is focused on right now. Okay, so let's put all of the pieces together. With all that in mind, here's our official call on Duke Energy. We're initiating our coverage with an outperform rating. And here's why. The crucial point is that, yeah, the market's a little hesitant right now, but we see some really clear catalysts coming up that could push the stock higher. Basically, Duke has a chance to prove the doubters wrong as they lay out their plan. So here's what you need to watch for. That detailed financing plan they're promising in February is huge. Also, keep an eye on how the rate cases go, and of course, any more announcements about new data center contracts. Those are the proof points the market is waiting for. And just as a reminder, of course, this analysis is for informational purposes only. It is not financial advice.